As we slowly creep our way out of winter and into spring, the housing market historically springs back to life. And coming off of a month where we saw the lowest amount of monthly sales for detached single family homes in Irvine in over 13 years, it felt like there was no way Irvine's housing market could get any colder in February. Well, the numbers are in, and we actually saw that amount of detached single family home sales decrease down to just 36 homes sold in February. This drop in sales is quite uncommon for February. In fact, the last time we saw home sales decrease in February dates back 5 years ago to 2020, where sales decreased by just a single home. So, what is causing this continued slowdown in sales? The themes we talked about last month regarding January's slowdown, well, they persisted into February, and the first of them is mortgage rates. Throughout January and into the later half of February, the 30-year fixed rate hovered right around 7%. These higher rates have continued to keep buyers on the sidelines as the combination of high interest rates and growing home prices makes affording a home even more difficult. The second factor is the US and global economy. The first full month of President Trump's administration has been filled with headlines of new policies and potential tariffs. And this has had a direct impact on the US stock market as well as the world markets, as many investors have been proceeding with a little bit more caution. And home buyers have been doing the same. Some have momentarily taken a step back from their buying process to see how this affects the real estate market. The combination of higher mortgage rates and buyer hesitation has led to a decrease in demand. Demand is measured by the number of homes that enter escrow, which dropped to just 34 homes in February. Similar to total sales, it is rare to see demand drop at this time of the year, especially in Irvine's market. Housing supply readings presented a mixed bag of results for February. Active listings increased to 193 detached single-family homes, which aligns with historical trends. However, this was not due to an influx of new listings. The number of new listings actually decreased slightly from 106 in January to 101 in February. The increase in active listings primarily stemmed from that same drop in demand as fewer homes sold in February. Despite supply increasing and demand decreasing, the average days on market, or average time it takes a home to sell, decreased in February down to 41 days. And this wasn't the only statistic that defined basic economic principles this last month. The average price per square foot of a detached single-family home in Irvine also saw a slight increase, settling at $943. This rapidly steady increase in housing prices we've seen in Irvine over the past 4 years has been driven by two main factors. The first is limited housing supply, which has continued to keep the market competitive despite these historically low levels of demand. And this has been common across pretty much the entire US and is what has driven prices higher despite these higher mortgage rates. The second factor is a little bit more unique to Irvine, and that is the high density of all cash buyers. While these higher mortgage rates have started to slow down some of these other markets in California or across the US, the high density of cash buyers in Irvine have kept the market moving along. Just last month, 23 out of the 36 homes sold were bought by all cash buyers. So the golden question is, where is Irvine's market headed for the rest of the year? And unfortunately, nobody has a crystal ball to see the future, as there are just too many factors at play. But in my humble opinion, I think we will see Irvine's market turn the corner and warm back up for the spring and summer, which means we should likely see an increase in demand, supply, and overall home prices. The real question is, how much will the market actually warm up? The main factor contributing to how hot the market will get this spring or summer is, well, you guessed it, mortgage rates. If rates continue to drop, then we will likely see supply, demand, and home prices increase at a quicker rate. If they continue to be stubborn and hang around this high 6, low 7 mark, then we will likely see a much more muted spring and summer market in Irvine. So if you're considering buying, selling, renting, or maybe you just want more insight on how to best navigate this market, please feel free to reach out. And if I don't hear from you, well, then I look forward to getting to bring you the next Irvine housing market update. Cheers.